Welcome to another episode of Blockrevision, and in this series, when I focus on trade idea section strictly, I'll be presenting you today a very interesting stock to invest or trade in terms of its opportunity that it gives. So let's talk about Pfizer today. So Pfizer is a company headquartered more than 150 years ago in New York. So there is a long history beyond this venture. Right now, there is a lot of noise around the company, right? Because the patients has met with some unethical approach regarding its vaccinations delivery, and also there are lots of skeptic voices around the globe. However, Pfizer is still a very strong company with a long history, as I has mentioned, and also with a very good revenue and also dividends. So let's approach the fundamentals of Pfizer's regarding on what data is saying. So Pfizer is a company with a very strong dividend yield history. The dividend is payable regularly and with a very good percentage among its competitors. Also, Pfizer has a very strong position on pharmaceutical market. That is one of the leader in its branch, and also we can find that Pfizer definitely among regardless of what some critics are saying, has really gained a success regarding vaccinations delivery. So we can find here out of the monthly fall that Pfizer just scored another key regulatory approval. That's the news of 14th of October, and Japan's approval opens up a market of several 100,000 patients in need, and the indication will add another 300 million to Pfizer's revenue base. Also, there's a mention of how high dividend yield is, and it also stands Pfizer in a very good position to grow. So since July, by August, we've seen a speculative run regarding a possibility of getting by Pfizer authorization of a booster in terms of vaccinations, and when the fact has turned up, we've seen a massive sell-off on news. Right now, we are getting nearly back to the point where we have started its bull run, and that might be a decisive point regarding where Pfizer is going next. So let's look at some fundamentals regarding Pfizer, and we can find that cash to debt, equity to asset, and debt to equity among industry doesn't look very well. Also, looking at cash to debt position, we can find that this exactly rating might be much better regarding of what the history has appeared as. So right now, profitability rank is something that is very good right now, but the future outcome of a company standing its ratings in a quite worrisome position. So I would watch at the Pfizer right now, not really with a chance of very good return in the future, just based on this recent gauges. Regarding valuation rank, we can find that such indicators as price to free cash flow is at quite a good level, but there are some more concerning things such as PEG ratio. So price earning growth should be much higher regarding on what really the stock is going to represent. So right now, with Pfizer paying such huge dividends, we can find that there might be one of an advantage of keeping the stock for a long term. The other indicators are not very positive regarding on what other competitors are doing. Per revenue and gross profit right now at the increasing level, so it also might be a sign of the company to turn its position to the better side, but it's not very sustainable, as right now Pfizer is generating lots of revenue on what this vaccination process is going around the globe. So with the pandemic to slow down, I would find possibly also slowing down of these indicators. So regarding PE ratio, we are still at the very low level, but it doesn't mean the alone indicator of PE ratio doesn't really point on what situation of a company might be in the future. So I would turn to another things, PEG ratio. So I have discussed this over a bit earlier. So PEG ratio is not a very strong side of the company. Earnings per share is increasing a bit, and also as we can find, free cash flow as well as the price to free cash flow is at the very good level. So Pfizer definitely is a company that has a potential to grow, but this potential is quite limited. Sales quarter over quarter right now is at the high level, but earnings per share for next year and also next 5 years are not at the highest possible regarding on what Pfizer might get if it would perform better. Analyst price target on PFE is right at where we are right now, with a little space of moving upside. So right now let's look at technicals regarding Pfizer. So Pfizer has broken out of this very long consolidation of 3 years that right now has set us a round bottom, that breaking out of this round bottom, typically analyzing technical analysis, points to be at 48% of an extension of such. So as we've seen, we have even exceeded an extension of a move to the upside and have reached more than 60%. So it's a very strong move, pointing us that the bulls are really interested in this stock. So even if considering the bulls has turned on its pedal to the metal right just at this authorization news to be published, we can see that still there supposed to be some bull strength on the sidelines, and possibly right now might be a very good point to enter a position to the that will speak for Pfizer. So right now we can find that we are in a very sweet spot regarding its volatility, because we've just gone through nearly 25% to the upside and nearly 20% to the downside. So possibly rebounds from here might also take a couple of percents. So if you'd like to take advantage of this volatility of recent Pfizer performance, I would just think of where we would find the best entrance in terms of profitability. So as we've broken this very important neckline of this round bottom, we may see that they're supposed to turn up the bulls right at the edge of this neckline. So typically, after very strong sell-off, the price is stopping right at the neckline, or even better, at the daily 200 moving average that we just have hit on the 13th of October. So right now Pfizer might be in a very good spot in terms of trend reversal, especially as we can find that on RSI chart we are forming a bottom, and possibly on MACD trying to revert a tendency to the upside from here. So this exactly support should be helpful to make the stock rebound. And right now I would like to find what is a possible extension of a move if we just rebound. So for Pfizer right now we can find that this exactly resistance has been respected at least 2 times in the past, in 2018 and also in 2020. I would expect this stock to firstly rebound to this area of $43. Afterwards, just make it once again. Afterwards, I would make my Fibonacci extension to find possibly very likely correction of the first move at the 0.38 points of this extension. So we would likely see such a move then to $42, and afterwards hitting possibly another local highs. And these local highs might get right back to where such corrections 0.38 are the typical, very common extension where the correction are getting back to. So 0.48 is a level, an equivalent of a level of 44.77. So we would have our eyes focused on this exactly level back then. So from this bottom, it's still about 8 to 9% to gain from here. So Pfizer is probably a very good stock right now to make a bet right now. With such indicators, with such fundamentals, I would find Pfizer to perform much better from here than it's right now, especially with average price target on PFE right at the $45. So I would find the 45 level as quite decent for its stock to be achieved. So in terms of trading board, I would put it right here for the first move. I would make my target at 33.16 with a stop loss or an alarm just set at 40.5. 49. So with a risk-reward ratio at the level of 3, it looks like a possibly very decent trade. So in terms of area of an entrance, where I find the entrance to be quite is a area of 41.14 and 42.04. So I would even react right now, or just wait for the pullback of this recent demand candle. Okay, so that's it for this episode. Thank you very much for watching. If you have any questions, just put it in the comment section below, and remember about leaving a like and subscribe to my channel if you have appreciated the content. Thank you very much. See ya.